All right. So, hope everybody had a good weekend. It is Sunday, April 16th. And for this trading session, I wanted to talk about some stuff, some action that happened throughout the week. What are we looking at going into tomorrow and then the week ahead of us? Some news stuff as well. Keep in mind, we do not have a lot of news going into next week. So that'll be pretty exciting because the last like month or so, we've just had like a shit ton of news. So hoping to get some good action in the coming days. So, first thing I want to talk about is going over one of the plays that we took on Friday. We took this really nice short, and I kind of want to go over my thesis behind it. And then also there was a setup that presented itself early on in the day right here at the top that I never actually entered in. And I want to talk about that one as well and why I maybe have missed it and why it was possibly a good setup. And then also going and looking at the trade that we did take. So going into Friday, I did have a long bias in the morning and I expected to see buy side levels get taken out. And the levels I expected to get taken out is if we're looking at a 1 hour here, we still had not taken this high out, and then I wanted to see this high also get taken out. So once we opened, going down to a 1 minute here, we opened in this range, and we had equal highs here, relative equal highs that I was expecting to get taken out, right? If I was going to look at this, we have this high matched up with this high. So I was expecting this is now going to be the next draw on liquidity. Also keep in mind, ES never really took this low out. So I wanted to look for a long entry, but I was a little bit skeptical because ES didn't take this low out. But at the time, let me pull up NQ here. We were forming an SMT with NQ. It was kind of like iffy though. It wasn't really like clean because we were kind of cutting through price action. And I'll show you what I mean when I say cutting through price action. Let me pull this up here. So this was the low created on NQ, right? And this was a low here. But if we go to the low that was created on ES, it was actually this low. So it kind of cuts through price action. I don't really like basing SMTs when it does this. I want it to be clean at the lows. But technically, NQ did make a lower low. Technically, ES did make a higher high. But again, something I wasn't really paying attention to because it wasn't as clean as I wanted it to be. So in the morning, I was looking for a long entry, but I didn't really get one. The only long entry that I could have seen at the time would have been these highs getting taken out right here. Once we took these highs out, we actually formed a 2-minute fair value gap. And this would have been the long entry. I was looking at the 1 minute at the time, and I didn't actually get the 1 minute fair value gap that I wanted. We actually just kind of chopped a little bit. 2 minute, we did get that fair value gap we were looking for. And that would have been that long entry. We were forming SMT from the lows. We know that the draw on liquidity is going to be at these highs. Once we get that big push up, break above these highs, we continue to hold above these equal highs. And then when we pull back, that would have been our long entry targeting that buy side level, but never really got that entry I wanted to. So I sit and wait, right? No, not FOMOing in anything. Once this high is taken out, it is a just sit and watch. Once this level is taken out, sit and watch. I don't touch anything until I get some sort of reversal or market structure shift to take it back down, because now that liquidity has been swept, we then look to trade the reversal. So we end up getting pushed up. And this right here is your market structure shift. So this is actually news. This candle is the thing that made me very skeptical to take a short play here. So we have liquidity swept externally on this, right? This big external level. We have internal liquidity swept. We get a push above, big displacement back down. This would be your market structure shift. And then this is the pullback into a fair value gap. So we have our model here. Our model looks great. And keep in mind, look at this, which something I didn't notice at the time. This would have been a great short. We also have SMT going into this fair value gap. So this looks like a beautiful trade. At the time, the reason I didn't enter this is because I didn't like this displacement. Notice how we have this big candle down, big candle back up. We have no really hold below this level, which made me a little bit skeptical on taking this trade. Looking back, it would have been a nice setup to trade just because the risk reward itself is worth taking. everything's aligned. Everything is aligning with our model. Even if I think it might not work out, it's honestly worth to take the trade, because if I was to take this trade, the risk reward would have been well worth it. I would be totally fine taking a loss, because my first price target would have been a 3 RR risk reward, and my runner would have been like a 10 risk reward. Like, this is a beautiful trade to take. This is worth the trade, even if I'm not confident in it, and even if I'm not, like, it's our model lines up perfectly. So that's where we have to be able to kind of push our emotions to the side. Like, even if you think it's going to keep running, like, even look how strong we are. Like, who would have thought, like, a new trader that comes in the market, when we see this massive push up, you're expecting, you're expecting to see a trend day, but the way we trade and the way we trade off liquidity, we get to understand where the market is most likely headed towards next. And when we get that model, even if you think that it's going to continue up, you have to trust the model and your edge that you're trading. And this is exactly telling us that reversal is coming. We get external liquidity, internal swept, market structure shift, decent displacement, pullback, SMT. This would have been a beautiful trade, the risk reward there, but I didn't end up getting that trade. So what happened was, when we finally get this sell-off, and this now gives me confidence. Once we get a sell-off and we take out this low, I am now confident that the next draw on liquidity, let me go to a bigger time frame, is going to be this sell side level here. And if I look at a 1 hour, you can see this is the most clean low after these levels have been taken, right? Or sorry, wait, right here. So on a 15-minute time frame, once these highs are taken, this is our sell side liquidity. I'm expecting this to now get taken after. I like to see, so most of the time, I do not like to trade continuations, but I will trade continuations when I'm confident. And when I'm confident with continuations, most of the time is when I know and can adjust myself to the price action that's forming for the day. And the reason I entered this short here was because I recognized how strong and fast the action was this day. Right when we opened, literally a straight up move, barely any pullback, straight up. And then we get this massive move down. So this gives me confidence to trade a continuation play into a fair value gap, because I'm not expecting us to, chop around, kind of come back and then have a push down. I'm expecting us to retrace, rebalance price, and then flush continuation, because the volume is showing me that we have so much volume going into this day. And the action is showing me that we've just been having very impulsive moves, that gives me the confidence to then take a continuation play. Since I didn't get my original entry up here, and I'm confident in the draw on liquidity being this low, I know that we're going to end up taking this low out. So how can I somehow get in on this on this trend with proper risk management and proper position sizing to then take advantage of that trade? And that's what we did here. So once we got this push down, I waited for a pullback to fair value gap. We got that right here. I entered into a short position, stop above that wick. And then we had a beautiful sell off to the lows. And then we just kind of chopped after that, right? Right when that sell side level was taken out, we just kind of chopped. And then just kind of sold off the rest of the day. And then we hit weekly opening gap. And then we bounced back from there. And then right now we're back up. We're actually in this 5-minute fair value gap here. So on Sunday, so right now I just drew in our weekly opening gap for the week. We go from Sunday's closing price to Friday's closing price to Sunday's opening price. This is going to be our weekly opening gap, which is 4171.75 to 4174.25. Now, weekly opening gaps are going to act as areas of support and resistance. They will also act as areas of magnets, right? Notice when we took this high out, we went straight towards weekly opening gap to redistribute price. And this is also redistributing price into a discount array. If I was going to draw in our fib from the high to the recent low, even if it's this low right here, you can see we redistributed price to discount below 50% retracement and then bounce from there once we hit that weekly opening gap. So this is our new weekly opening gap. Going to keep this on the screen for now. Going into tomorrow, I'm going to have, the first thing I want to look at is I do want to look at a daily. And if we're looking at just price action primarily, I am bullish on a daily time frame. I am bullish. We've had this big push up. Now, even though we're taking out these highs, I still think that we want to go higher and take out this high, which is our most prominent high on a daily time frame. I think that we definitely have enough momentum and strength to push through these highs and take out this 4209 level in the coming week. Looking at a 1 hour, I'm going to be bearish until, again, even though I think that we're bullish and we're going to come and take these highs out this week, I have to trade off of what the chart's telling me. And right now we have liquidity swept right at the highs. We have that big push down, pull back to fair value gap. So right now I have no strong bias. Even though I think we're going to take buy side out in this week, I still want to see more formation start to form. Since we took this level out and had that big push down, I want to see if we're going to come up to take out buy side from that high, or if we're going to sell back off to take these lows out, maybe redistribute price to take out sell side down here. Again, most of my bias and most of my thesis won't come until I wake up tomorrow and actually see the price action that happened in the overnight session. So yeah. Only 30 people compared to when you live trade shows people don't actually want to learn, just want to copy trades. I can't. I know. I think a lot of people will watch the replays as well, though. But again, there's people that want to learn, and then there's people that want handouts. So sorry, can you shout those? Yeah. So the values for the weekly opening gap this week on ES are going to be 4171.75, 4171.75 to 4174.25, 4174.25. That's the weekly opening gap for the week. All right, so now I want to take a look at NQ. And we do have a little bit different. Actually, I want to pull up ES here as well, because I think we have SMT formed on a bigger time frame. Let's check. Pull up this here, going to a 1 hour. All right. Now, what is that high? Okay, so we actually do have SMT here on a bigger time frame. So I'm going to take out these levels here. This high right here, as you can see here, NQ is actually forming this lower low, or lower high, sorry. And ES from this high is forming a higher high. So I do want to see if this will play out in the coming days. Again, we have that big drop down, market structure shift, pull back to 15-minute fair value or 5-minute fair value gap. We'll see if we get a sell-off back down to redistribute price, probably take out these sell side liquidity levels. We'll see. But looking at a 1 hour, we do have that bigger time frame SMT. NQ, again, NQ also had that beautiful push to take liquidity from that high. You can see that high that we had on a 15-minute time frame. Big high here, swept it. Let's see if there was any setups. All right, let's see. This would have been market structure shift. Again, this formed SMT with ES. Similar setup here on NQ. This is where we took that trade on ES. Continuation sold off. And then we finally took out that sell side level. Not really much. Okay, so going into tomorrow on NQ, again, similar action. I want to see if we will continue to push up here, but looking on a bigger time frame, it does look like this was kind of, actually looking at a bigger time frame, this does look bullish. And the reason is because even though we took out that actually wait, I don't need to look at a daily. What high is this that we're taking right now? Oh, so we took out this short-term high, or this high from over here. I still think that we want to push higher. And the reason is because if we're looking at a 4 hour, we draw in our fib from the high to the low. We've redistributed price to discount array. We've taken sell side from this low here, bouncing on 4 hour or daily fair value gap right here. Had that big displacement back up, pulling back. I think that we definitely can see higher on NQ in the coming days. We'll see. Even though we're forming this SMT, I still think that we look bullish. So we'll see how this plays out going into tomorrow. No news for this week. We have some news, I think. Yeah, unemployment claims on Thursday. So you have your new weekly opening gap. What are the lines inside of that? What do you mean? What are the lines inside of that? Wait, so you have your new weekly opening gap. What are the lines inside of that? What do you mean? The lines drawn from the Friday closing price, Sunday opening price. This like gap here is now our weekly opening gap.
Something else that I've noticed is for the new week opening gap, at least from like an order flow perspective, we consider this as like market generated information, and we don't really care much about Friday's close as much as we do about Sunday's open. So typically we look at the monthly open and weekly open. So I would recommend when you look at this to like specifically prioritize the open. Um, and yeah, that's all.
Hmm. I meant the red one. Is that last week's? Yeah. So the pink one, you can see it goes back to whenever it was created. This was Sunday, April 9th. The red one was created the week prior at 31st. And then there's also some more down here created from past weeks. So, but normally I like drawing in. So like Shai said, Sunday open is more the more important level to uh take a note of. But most of the time, the gap created is small, and it's this range is most of the time used very, very precisely. As you can see here, if we were looking at like a 5 minute here, we never closed below this previous weekly, or actually this at the time, this was new weekly opening gap, the pink lines. So 5 minute came down, we never closed below, came down again, never closed below. Also with that other week, we continued to hold these levels. Um, so yeah. So uh what does weekly opening gap act as? So it acts as support, resistance, and it also I like to think of it as a magnet. Most of the time, if we're in some sort of consolidation phase, again, if we look at like a 4 hour, we kind of are in a little consolidation. I mean, we're kind of just starting to trend up a little bit again. But if I draw on like a box here, we are just in this little range here. And most of the time when we have that weekly opening gap, that is an area that price likes to redistribute. Like, for example, if we take this past fair value gap right here, or not, sorry, fair value gap, this weekly opening gap right here, right when we, break through it, below it, we go back to it. Right when we break above it, we go back to it. Right when we go below that, we go back to it, acts as support or resistance, go back down. Then we go back to it, acts as resistance, go back to it, acts as resistance, go back, and then go down, go back to it, acts as support, go up, go back to it, go down, go back to it, go up, go back to it. So when we're in this kind of phase, right, this is the levels that we like to see price go back to. And most of the time it acts as a magnet, especially when we take out liquidity, like buy side or sell side liquidity. As you can see, every time we take out that previous high, we go right back to weekly opening gap. See, take a high, go right back to weekly opening gap. Take out previous high, go right back to weekly opening gap. So yeah. Also the same thing with sell side, right? We take out this low here, go right back to weekly opening gap. Never really took this low out, but this was SMT, so we did take this low on NQ, formed SMT, right back to weekly opening gap. What time frame do you mark it in? 1 minute. I look at the 1 minute candle. What do you classify for a daily open? New York open or midnight EST? New York. I only trade New York session most of the time. I sometimes trade London, but rarely will you see me trade London. I mostly will only trade New York open. How do you know in some market moves it won't return to discount zone before hitting the liquidity to take entry? How do you know in some of the market moves it won't return to discount zone before hitting the liquidity to take entry? I'm a little bit confused on the question. Could you maybe even give me like an example? But also,
Um,
yeah, like Cheyenne said, you'll never know. Like market's always unpredictable. So that's why we have to trade how we do, because we have to understand that market is unpredictable. That's the first thing about being a trader is accepting that.
yeah, I mean, I'm not too sure about like discount zones or any of that stuff, but just from like what I've learned and what you guys should kind of learn when trading is at the end of the day, you really don't know what's going to happen like at all. If you're asking me what'll happen, I don't know. here are the levels, here is my, probabilities, what might happen. But all you can do is just, plan out for possible scenarios and then trade off of that. You never know if it'll go here before there. You can just, see what happens in real time and then, place your leverage against that if you feel confident enough to. That's kind of all you can
Yep.
do.
It's all just a game of probability and applying risk management to that probability. So marking off the chart when you're doing the daily open, it would be 9:30 EST open to the New York. So if you're talking about like a daily opening gap, is that what you're saying? Then you'd go from the previous day's closing price to the London session opening price of whatever that price is. I understand what an SMT does, but is there a reason why? Is it to rebalance price? I understand what an SMT does, but is there a reason? So the reason why, honestly, well, there's no answer for, like, I really can't give you a straight answer for this because the reality is I don't know. It just happens, and as a trader, our job is not to question things. And I think Shai can test this too. The more that you try to like brain power you put into like try to understand why certain things actually does what it does, like the actual fundamentals of why it does it, you kind of overanalyze what we do. Our traders our job as traders is just to recognize what repeats and what happens over and over again, and then use that to our advantage. I don't really care why it does it. I just know that it actually does that, So when we know SMTs form every single day, there are divergences between ES and NQ. ES could form a higher high, NQ could form a lower high. That's telling us something. What is that telling us? It's telling us that maybe we could see a reversal potentially. Now, why does that happen? I could not tell you, honestly.
Yeah, I definitely agree. I think a big thing about kind of getting over that mental in trading is really just understanding that it's like kind of human nature to be anxious in a way, as in like, oh, what's gonna happen? Like, why is this happening? And you kind of like want reason for everything. But
Yep.
a lot of times, like you just, if you're not the guy on the trade floor, putting in those trades or that algorithm, putting in those orders. I mean, those algorithms don't even know like, oh, I'm gonna buy this because I think, the market. They're just putting in, orders based on math, like in different price models. So, if these algorithms are just doing whatever they're doing and people are placing the trades, like unless you're sitting there over their screen and watching, you really, don't have any idea. And there's no reason to. Like, it doesn't matter really if, there's a buyer or seller here. What you need to know is, okay, who's in control and how can I leverage off of this? Because if you go to either like AMP or to a futures account or like EdgeClear on an application, there's hedging and there's speculation. Hedging, those are going to be bigger players, longer term traders, with more money. They're just hedging their overall positions. And then there's speculators, and that's us. And that's exactly what we're doing. We are just speculating what we think price can do. Now, of course, we want to know, okay, why is this happening? But for the most part, there's so many different factors and things happening that, just wanting to know everything, you're going to overanalyze, like, he said, and you're just going to be in a bad position. So for the most part, you can understand a concept and understand like what it is, but understanding why it happens or, what's going to happen next is kind of irrelevant for the most part.
Yep. Wave, can you show me your fib setting and explain to me how you use it correctly? So, yeah. So my fib setting is based on standard deviation, which is an ICT concept that I might go over in the future. I'll give you an example, but basically my settings for this here, I'll show you right now, and I'll show you how I use it. Settings. Here we go. So I have 1, 0, -1, -2, -2.5, -4, and then 0.5. 0.5 is the most important though, because that's how we figure out what's discount. Pretty much 1, 0, and 0.5 are the most important. And then I'll show you what these are for, or how I use them. It's called standard deviation. So if you want to take a screenshot of this, you can. And then this will be recorded, so you can always go back and look at it. All right. So the way that I use standard deviation, it's another ICT concept that we have not really gone over a lot. But basically, it's a way to figure out what your targeted levels should be. And what you do is you find whatever the manipulation leg is. So in our model, right, we would like to see external liquidity, internal liquidity swept, and then market structure shift. So what you do is the manipulation leg is this leg right here to take internal liquidity. So if I draw in my fib from the high here and the low of the manipulation leg, this gives me my targets for what most likely is going to be hit once we break market structure and then our model sets up. So you take the manipulation leg, which is from the low, which is what the move to take internal liquidity once external liquidity has been taken, and then this gives you your targets. Most of the time, your 2 to 2.5 is your main price targets points, and then your 4 is where your runners and your sell side most likely be. And you can see it's kind of accurate where you have it. Most of the time, you'd like to see this line up with whatever levels or buy side, sell side you're looking at. For another example, let me see if I can find another example. Let me see. Let me see if there was a trade here. Let me see if once we took this high out, let me see if there's a trade. Gotta go back though. All right. Oh yeah, so we did take this trade, but there was no internal liquidity being swept here. There was really no internal liquidity being swept here. Again, we didn't really get a break of a high. I guess you could say this would be a manipulation move, right? Since this, when we were trading, because I did take this short on this fair value gap here. So I could say that manipulation move might have been once we got that high being broken, break a structure, pull back to fair value gap. We could draw this in. Being that, see how that 4 lines up perfectly with that low almost. That's what we kind of like to see, but that's kind of a bad example. But I don't really use it that much, but that's how you use it. Can you show us one more time how you find a new weekly opening gap? Okay, yeah. So today's Sunday, right? Price on Sunday night opens at 6. Once price opens, most of the time there's a gap that's created. When Friday closes, you can see if you're looking at the bottom here, it says Friday the 14th, April 23rd, 1659. That's when price closes. And then price then doesn't reopen until Sunday. And you go from the closing price. So you can see this is just a doji. So it'd just be the doji. And then the opening price, which is the top of this candle here. That's your weekly opening gap. What time frame do you mark out your major buy side and sell side? Most of the time I like to look at the 1 hour, but I also look at lower time frames too, because internal liquidity and external liquidity are both very important. But if we were going to talk about like external liquidity for like, if we're looking at this right now, would be this high right here. External sell side, right, would be this low here, right? So we're in this kind of range now. And then if we were going to like zoom in, right, we're looking at like a 1 minute here. Internal buy side would be this high, right? Internal sell side would be this low. So that's kind of how we like to mark in. Why don't you use wicks on opening gaps? Because you take the opening price. If we know how a candle forms, right? A candle doesn't open at the wick. The wick is the highest price that it went in that 1 minute time period. So if we're looking at like a 1 minute candle, right? Like understanding like the anatomy of a candlestick, we have the opening price, and since this is a red candle, that means we opened here and then pushed it down all the way to 4172, and then came up and then closed right here. And then the next candle opened right here. And then you can see we went up and then closed down a little bit. But this is the opening price right here. Then we came up a little bit, and then we came down, and then we came back up, and then the closing right here. So you take the closing price of Friday and the opening price of Sunday. And that's your weekly opening gap. Is there a weekly opening gap on NQ? Yeah, there is. I normally don't draw it in though, but we'll see. Let me draw it in right. We'll back test. I'll draw it in this week, and we'll see how it plays out. So similar thing, right? We take the closing price opening price. And we'll draw this in. And I like to make it a color so I know it's important, whatever it is. Okay, I'll make it the same as the color we drew here. So we know it's the same week. And then there we go. That's our weekly opening gap for NQ.
I am so impressed on how fast you can move through TradingView. That is impressive.
Dude, I was talking to Jay about Edge Clear, and I was like, dude, I'm sorry, but I will never change my charting platform off of TradingView now. I've become so accustomed to TradingView, it's crazy.
Yeah, the thing is it may look nicer, but functionality wise, you might change your mind eventually.
But I don't need like all that extra fancy shit, you know? Like the only thing I really need is like DOM. Now you ordered flow horror. You like that shit, so
Hmm. Dude, Thinkorswim is crazy. I remember so before ICT became popular, there was this like other price action strategy. It was called the Strat. I don't know if you ever heard of it.
Oh yeah. Like the 1, 2, 3s.
Yes,
Yeah,
sir.
yeah.
And that was what T-Mac and I, like me and him first started with that. And
Mm,
then like we would have scanners on Thinkorswim. Bro, I made like a library of scanners. We had 30 different scanners. It was crazy.
that's wild.
And then of course, basic price action just got destroyed when the market changed. So got off that, but man, that was crazy.
All right. So let's finish my session, then we'll let Cheyenne go on. Basically how I want to end this is just what I'm looking at going into tomorrow. Take a quick look at news. Again, we have manufacturing index in the morning. Don't really care about that. It's pre-market. Tuesday, we have CPI. Actually, no, we don't. We have nothing on Tuesday. Sorry, that's CAD. And then Wednesday, we also have nothing. And then Thursday, we pretty much the only thing is unemployment claims, but it's also pre-market. Don't really care. And then Friday, we have nothing. So this is a nice. Oh, actually, we have a PMI. Sorry. So pretty much the only really news that we need to care about is on Friday because it's at 9:45. So that's 15 minutes after the open. But yeah, so excited about this week because I will be trading full size and I will be trading on the funded future eval and try to pass it. So yeah. Wave. So about the news, if there's a news in the week, so that better for trading or not? No, I don't like trading news days. I mean, when I trade news days, I lower my size most of the time. Will you be making a video about setting up EPX? I'm guessing you meant Edge Pro. Yeah. In the future, I want to learn the platform more on because I don't have the capabilities to make a video on it yet because I don't know it enough yet. So once I become more familiar with it, I do want to make a video on Edge Clear and setting it up. So going into tomorrow, again, no really strong bias. I like just taking my bias when I see the morning open. Looking at a bigger time frame, I am bullish on the week until we take out this 40 or 4200 4208 level. This is our next buy side level on a bigger time frame. I think that we have room to head there. Looking at a 4-hour, again, we're just kind of slow going up consolidation to the highs. Looking at a lower time frame, like a 15-minute, we have our buy side being at this high from that Friday big push. And then we also have our sell side, which is down here at weekly opening gap from that sell off on Friday as well. So I am expecting potentially a continuation. I would like to see us head back lower now and take out these sell side levels down here, which might be nice, but I'm expecting that we might just come back down, take out this low here, and then maybe bounce off one of these PD areas and then head back lower. But I would like to see us a continuation back down before coming back to take these highs out. Yeah. Shai, do you want to take over so you can share your screen?
Yeah. For recording, should I just record my own thing or
I can
should
record
we
it
all
for
just
you.
put in a one thing? I'm cool with whatever.
Uh, I can record for you. I need to look at your screen though. So
Okay.
let me stop
Let me
sharing
just get
screen.
this thing going first. Hold on.
Yeah, you can share your screen now.
Okay, cool. Detach. All right, sweet. Sorry, this is
Curious how both you and Shy feel. If you had 3 to 5K to trade, would you go to funded trading route or just trade personal and scale? How long have you been trading for? That's my first question.
Yeah, that's the first question. Let me share my screen in the meantime. Screen 2. Okay, cool. Here we go. This down here. Okay. So are you streaming for me or should I stream? Or should
I'm
I
streaming for you.
record?
I got it.
Okay, cool, perfect. So first I'm just going to describe what this is. So on the right, we have our market profile. It's going to be based upon 30-minute TPOs. The side here is going to be a volume profile that is based from the swing low, so around here, right? So this is going to be all the volume and as well as the current distribution. So this box here displays the current balance that we're in, right? And for those that understand, we have balance to imbalance, back to balance, right? And since we're in balance, on what is this, around Thursday or Wednesday, I'm not too sure, we had price come down here, test the low of the balance. We could not find any acceptance, and now we came up to the highs, right? Or now we're coming back up. So my first thing is I'm not going to fight this trend. We're looking to hold up. We're, holding bid or, holding higher. And so first thing that I'm noticing is as long as value can continue going higher, I will be leaning towards kind of just taking any rebid opportunities or opportunities to go long to test 326.75. That's going to be my overall goal. Within that, we have the monthly opening at 260, also close to 254. So this little area also is like the Friday high. That's going to be our first area of resistance at around 251s to 260. So that's going to be the first area that I'm looking at, right? Then we have the month close and the monthly high at 311s blocked with this little distribution that we see here. Extending, let's do this. So we have this area, right? We can find value into this or above this. I will look to go higher to test this 326, but this can be like our kind of target for now. On the downside, we also have this, right, which is going to be another LVN that we see here. So realistically, as of now, I'm looking to kind of just my ideas, and I erased all my levels so I can continue and kind of show you with a broader eye, but value shifting up, and as long as we can hold this area, which you could see held bid at around 180s, I'll be looking to continue going higher, right? From a volume profile perspective, we have this kind of just, balance range shown here. For those that don't know, this one on the right is going to be my monthly value or volume profile. This one's going to be my previous week, and this is going to be the current week. So from understanding the previous and monthly, we have a couple distributions, right? And I'm going to use my annotation so that this is a little bit nicer. So we have this distribution, and then we also have this distribution, right? And we're kind of the same here on the monthly. We have these two larger distributions. So what I'm going to do is mark this. And this is, kind of where I get my main levels from. It's going to be from this chart. So we have this LVN at 890s, 899 area. So we have that, right? And if we look at the daily, we have this distribution on one day that couldn't accept into price. We had this distribution that opened up into price, couldn't hold, and came back down. We have this distribution below, and our distributions on the daily are respecting this larger one as well. So this is going to be entry into our lower distribution since we are up here now. And then below that, we have around here, which is going to be an interesting point. So this can be about 1350. So we have this small distribution to think about. And the reason why I'm marking out kind of how the distributions are working is for the simple reason as, price moves from balance to balance, as we know. So if we can understand, what currently price is moving towards and the value that we're finding within that, we can then base our trades off of that, right? Like if we're entering into a lower distribution and you don't know that and you're trying to long out of that, well, you might have some issues, and then vice versa, right? So then we're looking for more kind of LVN systems. So we have this for the current days. And is there any questions so far on volume profile? I did post a video kind of explaining the basics. So if you have any questions, now would kind of be a great time to answer. Then we have this end of the profile here with this distribution. So 175, I'm going to be interested in. And now we have this bigger distribution that we're going to be in, right? So if price can get below 175, I will be looking to kind of look for a hold below that. And if we can come down. Are all these pretty basic chart setups? Or so I'm using something called Sierra chart. And, you know, if I just open up a new, this is what it'll look like. So yeah, there's a lot of customization that went into it. And if anyone does use Sierra charts, just let me know and I will share my chart book with you so you don't have to deal with all the creating stuff. Totally get your left chart, a little lost with your chart on the right. Okay, so this is my market profile. So as we understand volume by price over here, or the volume profile, you know, we have data based on volume that goes by price. Here we have time by price. So how long has time been spent at a price? And these can be understood by 30-minute periods, aka TPOs. And this will go by periods of A, B, C, each one of these representing 30 minutes, right? So if we can understand where price spent and where price didn't spend, we come up with a almost bell curve, same with the volume profile, but now we can see how long did price spend here and did it accept or reject, right? So what I do is I use this understanding. There's, you know, a lot more that goes into it, but you know, that's just basic understanding. And then I also include it with volume profile. And then I could see, okay, well, price clearly held this, right? Price is finding value higher. So, and we are in this distribution and volume is accepting it as well. So then you can make trades based off of that. And then these levels like monthly opening, highs, lows, these are all just market generated information. And what I found, especially with order flow, is market generated information is kind of, you can realistically just trade off of that, right? And, you know, you might be wondering, okay, well, what is market generated information? This is going to be, you know, the highs, the lows, the opening price. We have something called value areas, which you understand statistics with, you know, 68% being, you know, one standard deviation out. With trading, we have 70% being kind of our value area. So if you see here how we have really white and then grayed out. So the white part is going to be the value area, while the gray will be the kind of either tapers or where value didn't spend too much time. So if price can, you know, do more, then we'll expect, you know, different scenarios. And then same here, the blue is going to be the value area, and then the gray will not be. There is a lot of market profile concept videos in my Notion as well, if you want to go over that, but I'm kind of going to go back to this. Can you see charts like this on no. TradingView is kind of limited with order flow, but yeah. So I just trade NQ. You can do this with any futures market, really. I would go over ES, but I just don't trade ES personally. So unless I see something on the ES like depth of market, I won't really care much.
Jet Funded Futures uses Edge Pro, and they have a really good order flow.
Oh yeah. That
you can see all of this on Edge Pro through Funded Futures Network.
Yeah. So back to this before I get off track more. What the heck? Oh, there we go. So, you know, we have this main distribution from 175 to 12,090. So just that area is going to be a big area to think about. And then within that, we also have 132. Let me extend this. Perfect. So it's going to be like something like this, right? 131. So we have 131, 13,089, 175, right? If we can open tomorrow and hold above 175, I will look to take out this upper distribution at about probably about 219. So if price holds above 175, and then we will look to target about 219 area. And the reason for that is because of the LVN and end of distribution, right? So let me go back to annotating. We have this big distribution taper off, kind of a taper off here into this main distribution, with this kind of being our line in the sand at 131, and then 175 giving us access to the upper distribution to trade. And if we can do that, I will look to realistically, in my eyes, the best entry would be an entry at 175, and then we could take that to 219 as our first target. And if we can get above 219, I'll then look higher. But since we don't have much data off of that, what we can do is kind of just take these highs. So, 256 area and also 226. And yeah. So if we combine these two, we have 180s here being where I wanted to look for a bid on market profile. We have 175s on volume profile. They coincide pretty well. So these are, this is gonna be my main target, like my main level, right? This is what I'm gonna be focusing the most on. And then after that, we have 255 here, which is the same as 255 here. So we'll be looking to take bids tomorrow, 175, first target at 219, and then 255 after if possible. But that'll be one trade idea. Another trade idea would be if we open and cannot get above 175, I'll then look for a reversion down to 131. And then if we accept below that, the end of the distribution would be 13,089. So once you understand price as like distribution to distribution, you have 1, 2, 3, 4, 5, 6 levels, 2 different plans, and you can trade either one of them. Or if the market balances and rotates, you have levels to trade in between. So this is kind of just how I get my main levels. I look at MGI, volume profile, market profile, see what comes together. And if it comes together, I use it. And that's kind of just how that goes. And then my second way of getting levels is be looking at the DOM and kind of just seeing either a big buyer or big seller intraday. And then I'll note that and kind of just look for that after. So yeah. What is this on? This is Sierra chart. They're like probably the most customizable broker you can find, and that is out there. The only issue is the support is terrible, and it's very, like, as you could see, very confusing. So yeah. Is there any questions though on any of the levels that I got, or any like volume profile concepts? All right, cool. If that's the case, then I will probably just end this here. So yeah, thank you guys for joining, either for me or Justin, and hope you learned something. Oh, you said you had a lot of this posted on your feed. A lot of what posted? Oh, yeah. If you go into the Discord here, just go to my channel, pinned stuff, introduction for new traders. So yeah, that will be that.
All right. We
right,
good?
Thanks, guys. Yeah, I'm good.
All right, sounds good. Shy, you should make a video on market profile like the one on the volume profile.
I first need to get through everything I want to get through on volume profile, and then I might move on to market profile and then the DOM, but that'll be time from now.
All right, guys. Thanks for coming by. Hope you guys learned something from Shy and I. I will see you all tomorrow morning for live trading. Shy, you gonna be on?
Yeah.
All right. Sounds good. All right, guys. Enjoy the rest of your night. If you have any questions for me and Shy, always feel free to add us in the Discord. We'll get back to you guys. So I'll see you tomorrow morning. Peace.